Hi guys, welcome back to the channel, welcome back to a new video. And in yesterday's video I said don't get too excited yet. We first have to breach a very important level for Bitcoin, and we did breach it yesterday, and that level was the 23k. So the question is, where do we go from here? I am going to show you exactly what I'm seeing in the charts, but before we dive in, please do me a favor, hit that like button, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think that's useful. Also feel free to check out all the links in the descriptions, like my Twitter and Instagram. Follow me there, I post there multiple times a day. Now let's get started. We are starting here with the BTC USD pair on the daily, and as you can see we had a few massive pumps up in the last few days. This green candle is the one of today, and I said yesterday again 23k is important to breach because we just had these two resistance lines right here, horizontal, one at 22,795 and one at 23. I want to see us above there, close the daily above, and then we can march higher. We did that, so that looks good. Then I had a target, as you might remember, that was the golden pocket that we drew there yesterday, and that is from this top all the way to the bottom of this wick. And I said if we can reach the golden pocket, that will be one of my first price targets, and now we also are at that golden pocket. The next one, if I would make this a little bit longer, that will be the one from 11th. We also talked about this yesterday. There's the one from Monday. Then that is approximately $25,000 ish that we then my next price target to the upside. Also, we said yesterday, well, there are a few scenarios why we could go down. One of them was on the 6 hour, is that we are creating a bearish divergence. And then I believe that this hump was not there yet, but still, actually, you could say that we're kind of in a divergence, but it looks like it's going to be unvalidated. But then the price goes higher, the momentum wave goes lower, money flow did not really go lower yet. Preferably, if it's up to me, the dream scenario would be that now we are retracing a little bit, just to cool off a little bit. Now that we once established a daily candle above 23k, go a little bit lower, and then maybe retest these levels right here, maybe the tops. That would be very nice. Then we have a little bit of a retracement, and then we go on higher. So I am aiming, if we go lower, to approximately 22,100 ish. And in the worst case scenario, let's say 21,800. That would be my worst case scenario. As you can see, I also drew a line here. Let me zoom in actually to the 4 hourly, then it's a little bit more clear. And there you can see that if I also make a line right up here, is that we are making ourselves a bit of a broadening wedge, and so far the levels has been respected very well. So you would say, you know what, it would make sense if we maybe roll over just a little bit, retest, and then go higher. This bottom would also approximately be at 22,000, maybe a little bit of a wick as 22,300. That actually would be super nice if that happens. On the hourly, we have a few signals that we could go lower. We have a bearish divergence here on the hourly. Now again, people, don't get me wrong, I don't want us to go to zero. I also want us to go to 100k, but on a sustainable way. So sometimes a little bit of a retracement before we're going higher, that will be very nice. Price makes a high, new high, and momentum wave goes lower. Money flow not really to the downside. Looks like on this hourly we are going to create a green candle again, but that could be a signal. Also here on the hourly, let me zoom in here. Then you can also see that this is actually a swing filled pattern. We're having a high, retrace a little, making a new high. This red candle goes higher than this high, and then we go down, so it's a filled pattern. Then you could say, well, then we usually trade a little bit lower. This candle right now that we're creating doesn't look like it at all, but we could also still, like I said, it's 18 minutes on this hourly candle, just a little bit like this, and then retrace and then go higher. That would actually really be ideal. I'm just afraid that if we start pumping now as crazy to, let's say, 25, 26, 27, that is just a harsh rejection down. So I want to see us a little bit more stair stepping. So the two ideal scenarios for a healthy long bull run for me are these. You start off, step higher, and then consolidation in a factor of time, a little bit higher, consolidation in a factor of time. So these periods, these sideways periods, that is the moment where you see RSIs resetting a little bit, everything cools down a little bit, and then suddenly there's a pump up, then a little bit sideways, pump up, sideways, so it's really stair-stepping higher. That would be perfect. And the other one, but this one is a little bit less sustainable, is where the price stays low, 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 and then slowly we're going up, and suddenly you're really getting this blast off. This usually results in also in a huge dump down, but these of course are amazing trading ranges for a day trader or swing trader, and you can make insane gains on these kinds of trades. So far it looks like we are kind of getting a little bit the second scenario where this price is just going higher, 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 higher. So like I said, I actually want to have a little bit of a retrace before we go higher. That for me will be the ideal scenario. Also, I also saw that on a 12 minute we have a bearish divergence as well, just like on the hourly. You can see here the momentum wave is going lower. Also the money flow is going lower, so this one is in our favor. Let me see. So right here, and then here on the moment, of course, on the price makes a new high. That one is pretty clear to see. So yeah, could play out. I have to say, of course, the trend right now is 100% up. The trend is your friend to the end. So shorting is a little bit tricky. But you know, if you short it, then just right away take your profit. But from a probability standpoint, it would be nice if we maybe roll over just a little bit and then go higher again. That would be very, very nice. Very important to say, don't forget your surroundings. And what I'm saying by that is that we most likely have a rate hike from the European central banks. Everyone is aiming for at least 0.25%, but maybe we are going to see 0.5% because inflation is just rising. You can see here when Christine Lagarde is now the boss, you see that inflation is tremendously spiking, and under Jean-Claude Trichet and Mario Draghi that was not really the case, but of course they were already busy with quantitative easing, so the printing of the money already happened since tremendously since 2015-16, and there you just really see everything just taking off, and then it takes a little bit of time before inflation picks up, and once it picks up, boom, you just see it shooting up. So with now inflation at, what is it, way over 8, maybe 9%, the ECB maybe needs to press on the brake a little bit harder than expected. So I would not be surprised if we see 0.5% rate hike. I actually was already a bit surprised that they talked about 0.25 because of the situation, and in the States they're doing at least 0.75. We'll see that most likely next week again. So that is where all eyes are on right now. So like I said, I would prefer a little bit higher rate hike. Like just rip the bandage off, let's get over with it. But yeah, they want to do this slowly. So we'll see. I hope 0.25. The market is counting on 0.25. So we'll see. Then another one that is also part of our surroundings is that the inflation in the UK again is higher than last time, 9.4%. Now I said this already multiple times, is that if the inflation is suddenly 9.3%, it doesn't mean that we're topped out. We can have 9.3 once and then back to 9.4, 9.1, maybe suddenly spike up to 9.5. Just because we have a following number that is lower than the previous one, it doesn't mean right away that inflation peaked out and we're going lower, 100k, yippee-ki-yay for Bitcoin. That's not the case. So be careful with interpreting this inflation kind of stuff. I also mentioned a date already multiple times. It said December 2023. That is what I'm aiming for. Then I think inflation will really come down a little bit. Could still be high, 5, 6, 7%, but then I really think inflation have really peaked out if the central bank just keep on rising the interest rates. And then I think we are in a little bit more safer areas when it comes down to the economy. So again, quickly for BTC, the levels in here on the upside, you know, there's approximately 25k if we would break out. If we go down, would like to see if this broadening wedge holds. Depends a little bit on when we are going to roll over, but then would be 22,500, 22k to retest these clusters, these levels right here. If we are really breaking below, let's say 21,800, then I'm getting concerned. Then I'm thinking that this was just a major push to the upside by the market maker, grabbing all the liquidity, and then we are going down again, and then definitely the 19k is then back on the table. But we're not there yet. Let's just now see how far we can push this baby up. Take your profits, move your stop loss to entry once you are in profit, because you have seen the last few days everything is super volatile. Yeah, once we reach a certain level and the wheel thinks that was it. Thank you so much. Start pushing the price down, then you see all your profits just going to waste. Be careful also who you're following, because you see the most crazy stuff again on Twitter and on YouTube, and the most crazy price predictions in within 2 weeks to 48k and I don't know what kind of crap. Don't fall for that. Take it level by level, and we'll see then what the chart is telling us on indicators, on money flow, momentum waves, yada yada yada, and that's how we are trading it. No one ever got off worse by taking profits, so don't be afraid by not guessing the tops and the bottoms. I also didn't load up the bandwagon on 18 or 19k, so that's absolutely fine, but just make sure that you protect your capital, trade level by level, whatever that then is to the upside and downside. And if you follow me every day, then you kind of know what levels at least I am looking at. So guys, if you like these kinds of updates, again, please do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends who think it's useful, and follow me on Twitter and Instagram, where I post multiple times a day. Thank you guys so much. See you next one. Have a good one. Bye bye.